unlike a lot of producers, I want to say this correctly, that go out, hey, I'm the sales guy, right? I had to I'm very technically proficient. I know my stuff, and that's because nobody wanted to work on smaller transactions in search. Everybody used to make fun of me. So I kind of learned that. And then Andy kind of grew up more in the path of the hard, diligence for some of the largest, PE firms.
When I talk to searchers, frankly, like that's one of the things I wonder is how are we going to do in business development? And like anybody who's successful in business in any capacity has some sales ability, whether they know it or not.
In my experience, the searchers who aren't comfortable getting involved in sales are like, I'm not saying they're at a competitive disadvantage. I'm concerned for their ability to be successful. NewCo Risk is a specialized insurance brokerage focused on the needs of financial sponsors, including private equity firms, independent sponsors, and search fund buyers, and the companies they acquire.
Welcome back to The Intentional Owner. It is me, Kaustubh Deo, with Sam Rosati, as always, and we've got two guests today. Sam, you want to tell us?
I do. So our guests today are, I guess you'd call them like part of the OG crew in ETA. Yeah, go ahead, Andy. Laugh.
I was so excited. I was talking to a reps and warranties insurance broker last week, and he said, "Oh, Andy, I know who you are. You're an OG insurance for private equity guy." I was like, "Wait a minute, that makes me old. That's like 20, 25 years ago stuff." So
that's okay.
Glad to be there.
So the reason we have you here is not just because you guys are insurance experts, all things insurance, like commercial, reps, benefits, all that stuff, but also because you guys are building your own business. And I don't know how much of the detail you're willing to share. We can kind of see where it goes, but we can kind of call this quasi ETA. You're building an insurance business via a hybrid of startup and acquisition. So we kind of want to hear both stories. So why don't we just start with like quick intros? Who are you? Where do you come from? And bring us to maybe like your prior job, getting together and thinking about being entrepreneurs.
So I moved to New York City in 2001 to follow my big brother to Wall Street. And because I wanted to be a rock star, obviously I'm not on Wall Street. And anyway, I lucked out, wound up on worked at Aon, which is one of the two biggest brokers, wound up on the private equity team because my boss's boyfriend ran it and he thought I could write a good email and also could hold my liquor. Those were the two qualifications for being on the M&A team. No real knowledge of business, but I read Rich Dad Poor Dad and it was like, buy assets, not liabilities. So I went and just kept working away at the insurance thing, quit, went to business school at Arizona State, which Josh and I share Arizona State, it's a commonality, but then went back to work in insurance. And I wound up basically doing insurance for private equity for 15, 16 years until I met Josh. And really at the same time, Sam, like that first SM Bash was where I was like, wait a minute, this is like I can use my private equity skill set, but use it for good and not evil. And then concurrently, the entrepreneurial journey stuff, my college roommate, who's my real estate business partner, his dad owned a chain of rent-owned stores. And so it was a huge, I know it's kind of kooky, but like, all this stuff has been fun for me to find out how people make money and weird ways to make money. And like kids don't know about this stuff. Anyway, Sean, we'd always been kind of entrepreneurial. And when I moved to Missouri, we started doing historical tax credit rehabs. So I've always, up until the last year and a half, I always felt like I had two jobs anyway. Now I just have one job, which is NewCo Risk. And I've been politely not pushed out, but like, all right, we know you're busy, but
yeah, I mean, background, after school, moved to San Francisco to pursue investment banking. I did a kind of like a 2-year analyst gig. Upon kind of exit there, it was, the Great Recession. There really weren't a lot of opportunities, but a firm I interacted with, as an analyst, you're, basically a quarterback with a lot of third-party intermediaries. And one of the firms was Equity Risk Partners. They were a national broker focused exclusively on, middle market private equity. Cut my teeth there at the time. This is years ago. There were only a handful of search deals a year. Search ETA deals really a year. And a lot of the original investors are actually middle market private equity guys and girls, but are investing back into search, back into their, you know, business school, classmates. And so they'd pass it off to the junior guy. Nobody wanted to do these small deals. And I just started to kind of focus on it. We noticed that some of those earlier deals would get sold to our middle market clients. Some of those earlier searchers went out, started their own funds. At the time, Sam, it's probably right when I met you at one of the first like Booth Kellogg events with you and your brother. That was at 12 years ago. And it just slowly snowballed. I'd say Andy and I kind of knew each other more as friendly competitors, but nobody was really focused on the search ETA kind of community. Andy didn't really know about it as well.
Yeah, I have a funny thing that happened to me in my job before Symphony. The relevance of it, yeah, I got an inbound email from a searcher saying, "Do you want to sell your insurance agency?" And I remember getting on the phone with her. I'm like, "What the hell is a search fund?" And she's like, "Well, I just graduated from Harvard, and it's kind of like private equity, and I want to buy your company and run it." And I was like, "Well, cool. I don't actually own it, but."
All right. Well, so long story short, you guys both actually come from Wall Street. So like getting into the search, ETA, independent sponsor insurance game was for you coming down market. And so then just so everybody connects the dots, you guys really started working together at a prior job. And so that's how we kind of got to know you is two of you have built your reputations as being like one of the few names of people who actually do a bunch of deals in the kind of the area where Kaustubh and I play, the self-funded search community. And it's really hard, right? Because, we all have friends who are local insurance brokers and you can call them for help. Whether you're going to get like good service or not is another thing. So I don't know, like what are some of the learnings that you guys had breaking into the self-funded community?
I think we're going to come at it at different sides. For me, as I started to focus on search, I was kind of left alone in a way. Nobody wanted to work on small deals. And so I had to really just cut my teeth. I was doing a lot of my own diligence and just kind of develop the right processes, develop relationships with the right, markets to kind of build out, a focus within this niche. And I think that's one of the values probably that I'd say we bring is that a lot of brokers, right, don't want to do the small stuff. Right. I mean, we can kind of get into this a little bit later, but they all have, minimum size, minimum thresholds. Nobody wants to kind of do stuff, at this end of the market. And we kind of realized is that we see so many, repetitive insurance matters more by industry that you focus on than overall size. It can be a large SaaS deal, but there's not a lot of, premium there. It can be a repossession company or a towing company that's a self-funded deal. The second largest expense outside of payroll is insurance. And there was a disconnect between, I'd say kind of the sophisticated brokers that you would see at a lot like the Aons, the Gallaghers, and then what you would see at the local level. So I think we're trying to bridge that gap.
As a tree service company owner,
I think the other
I'm
thing.
very familiar with that as well. The premium.
All right. So I think two things I saw too is you were willing to go help people like Kaustubh and me, like diligence the insurance program on a small business. And then two, you were kind of willing to spend the time to help us understand it and not just say like, hey, here's where your premiums too high, too low. You're willing to have like a risk conversation, which like was impossible to have prior to sort of the ETA community popping up and then you guys fill in that gap. Why were you doing that?
I noticed that unlike a kind of the middle market where you have, that are just so transactionally oriented, they do a deal, they move on to a next. when you're working with a search or as somebody within the, kind of the ETA community, them taking out a personal guarantee, or if they're going out raising investor capital, it is outside of probably a birth, a marriage, one of the biggest moments in their life, to be frank. And it's really cool. Like, you develop really good relationships, like, and you see the talent, and hey, you're working with just awesome people. I mean, Andy and I always joke, like, we'll have a conversation. We want to help. We want to help people, whether it's something that we can place or not. Like, we want to make sure that they know they're taking such a big. Let me rephrase it. They're taking such a big risk. That I think the least that we can do is kind of help them. I think the other thing is that nobody outside of maybe a personal auto homeowners, renters, nobody really knows insurance. And in the commercial world, like, they're buying, it's so specialized and so skinny down. A lot of what we do is education. There's the diligence part, but it's also, hey, what are we actually buying? Like, a lot of people don't realize, how involved insurance is going to be post close. Every new contract they're going to have. I mean, I'm sure both of you guys have seen it. You guys want to, enter into a new market, sign up a large customer. They have all these large insurance requirements. So a lot of it is education.
I'm curious, Josh and Andy, like, we've talked about this before. One of the challenges in small business is the really good vendors, they can just move up market and, do larger transactions or support bigger clients for similar amounts of work. And so the people who choose to stay with small business are either very passionate about it and, just enjoy working with small business, or they're like not that good at it, right? It's like one or the other. And so, and like when I, commiserate with all my business owner friends, we're constantly trying to figure out vendors that are actually like good at it and doing it for small business because they like it, as opposed to the rest. And so I think, like, you guys have come from up market kind of down, which is unusual, right? And so I'm curious if for you guys, like, how you think about your own business model, like why you've selected for this, and why not just keep going back to upmarket where you presumably have relationships and can do larger deals.
I'll take a stab at it. So, I, first off, I want to make sure we don't say we don't work on larger deals. We'll happily to work on larger deals, bring them over. But right,
I mean, we're working on a carve-out from a public company right now. That's, so we do larger stuff. I can probably, I can probably answer this probably a different angle than you, Andy. I mean, you learned search kind of through me. I think you just fell into it. Like, what have I been doing my, my whole life? Like, personality wise, like, this is so much more me than, what I've been doing, before. I think for me, it was, as I said before, you're working with somebody with, just awesome people that are just betting on themselves, right? There's nothing cooler than that. I think the other was that, we can get into this later, is that all these brokers, there's been so much private equity, there's so many aggregators and consolidation within the industry, and they are setting just kind of minimums. They want you to only go after bigger stuff. They're not going to pay the producers unless it's a minimum size. They want you to hit 30-40% margins. And with that, it becomes a drop in either you pay the producer well or you pay the service team well. You're not going to have both. And that's why you see, even though you have some of the largest brokers, you get the terrible service, right? Because nobody wants to, they're paying one or the other. So
my thought was too, and it's worth mentioning this. I mean, Josh got all those things were true, and what's also happened concurrently is the impact of AI. I know it's hokey to say it, but insurance, particularly being such a paper pushing intensive industry, like I think that we're going to be able to have the margins by using technology efficiently that the big brokers have, while providing really good service to small businesses. And I think a big reason we can do that is because it's just frankly, it's more nimble. Like, being a 10 or 15 person shop, is we can implement and adopt technology way faster than a 5 or 6,000 person firm. And I worked in one of the aggregators for a year, and it's like, it's kind of just because anybody's ever done it. Well, Sam, right? Like, just because you buy a bunch of companies doesn't mean that they merge into each other all of a sudden and it's, one organization. There's a lot of work that has to be done there.
Let's shift gears a little bit. So I want you to hear that, or I want people to be able to hear your entrepreneurial journey, though. So, take us back to, you were working together at a prior insurance company. Somebody between the two of you must have had the idea. So tell us about the idea and why you would go on your own. And then, to the extent you're willing to share details around how NewCo got formed, that'd be great.
Yeah, I can start off. I think I've always wanted to do my own thing. Part just myself being kind of entrepreneurial, part kind of, I say, frustration navigating the insurance brokerage, landscape. I've looked at a few deals before, but nothing, ever closed. But I wanted to do my own thing. Andy and I started I think some of it when we were working, at our prior firm, people were like, "Wait a second, you don't own that company? Like, what are you doing?" And it wasn't just once; it was just like, "What are you guys doing here?
Why are you working like that for somebody else?"
Yeah. Yeah. And so Andy and I started kind of talking about it. Some of it actually had to do with things we wanted to do marketing wise, that we had to go through different channels to get approved. It didn't get approved. And so Andy and I kind of started we would joke. I probably own like 20 different domain names as we were thinking about, what to do. And so we kept on just calling it but we would joke at NewCo, we should do this. At NewCo, we should do this. And eventually, I guess it's the evolution of the name, but like my wife was like, "Why don't you guys just use NewCo? Is it available?" And it actually was. Fast forward, Sam, I know we had a number of conversations, but I was getting really antsy. I really wanted to do my own thing. And the CEO reached out and is like, "Hey, I want your business plan, for the next year." And we were just sitting there like, "What's our business? Like, what is, like, our business plan is we want to launch NewCo, right? That is our business plan. We want to effectively leave." So it was we wrote we presented our business plan, and we also kind of sent a letter, and it was very similar to the letter that was actually released when NewCo launched. And it was a letter to the board. It was a press release to the board, basically of Josh and Andy kind of spinning out a new division called NewCo Risk to focus on search fund independent sponsors, in the private equity community. I joke like, I think Andy, I was the one that probably pushed it along to, eventually I'm like, "We just got to do it." And I was like, I told my wife,
It was your 40th birthday. Do you remember?
Yeah, that's right.
Reminded me, you're like, "I'm doing it before I turn 40. All
That's
right.
right.
So
Funny enough, I actually had my
But sorry,
daughter.
but Josh, just to clarify,
So-
you were pitching it to the board at the existing company as, "Hey, we are going to spin up a new division."
Correct. And it was the way we presented it was the press release that was eventually released was very similar to what we actually sent to the board.
Yeah. So that's how we pitched it. Was like, "All right, guys, envision this. 6 months from now, the Symphony Risk puts out this press release, and it's going to say Symphony is proud to divest this unit. We're going to still." And originally we pitched it as a carve out, but with substantial rollover equity from the sponsor, because we wanted that tie. We thought it would be more helpful. I think we thought it'd be more valuable than it probably would have been, because
You wanted carrier relationships and stuff like that. Is that why?
Yeah, that's getting on. I think initially it was, I might be getting fired today. Like, we basically
that too,
resigned.
right?
Yeah. Like, I think I told him, I was like, I might be getting fired. So basically, and they were receptive, and I think a lot goes back to my prior relationship with the former CEO who, kind of trained me. I think some was like, "Hey," the board's response was, "We love your idea. How can we support you? But why don't you want to build it here?" Like, what aren't we giving you? And what was tough is that they weren't giving us stuff. It was, let's be honest, like they're private equity backed. They're gonna sell. Then I'm gonna be sitting there. I'm gonna have to. I've already been through that cycle. It's miserable, and I really just didn't want to have regrets about not trying my own thing, honestly. So i- they were they were actually initially okay with kind of a partnership and wanted us to kind of come together and try to put the details. And it kind of, I think a lot of the board was like, are these guys going to do it? They're making really good money. Like, what are you doing? Honestly, this doesn't make any sense. You have good equity in the business. You're doing really well. Why? And so it was a series of conversations for quite a bit. I think a lot was I didn't think they I think the board didn't think we had the balls to do it, to be honest. That we were that serious and they wanted to hold on to us for as long as possible.
I could see that. So then, walk through actually doing it. So you
Yeah.
guys went out and did a transaction to
Yeah.
become entrepreneurs.
Yeah. And so a lot of the one of the questions I get often is it's insurance, right? There's not a lot of CapEx. You can go ahead, get licensed, put a shingle up, and there you go, right? By doing the carve out, it gave us a few things. One is that in insurance, you need carrier appointments, market relationships. So by having all this premium, we could go back to travelers middle market, and so on, because we had the clients. We didn't have to get, broker of record. We had the bill of sale to automatically transition stuff over. I didn't have a non-compete. California, love it, hate it. Andy did. It kind of got us out of out of that. And it also gave us the cash flow to build, right? It would have taken us 2-3 years of getting clients to have that cash flow. All of a sudden we had all this, we had the cash flow, to kind of fund operations, which was huge. Yeah. Right. I mean,
But
Andy, what do
sorry,
you
explain to the listeners that what did you buy?
So we essentially, I think the easiest way to think about it is that we bought the renewal rights to probably about 150 clients, plus or minus. And so what we didn't buy
Essentially a
was,
book of business, right?
yeah, that's exactly how I'd think about it. And since what we had to our advantage, obviously, is that the clients all knew us, either Josh and I or both of us, or some capacity as like, oh, it's my insurance guy, right? And so that conversation, I think, I, I think we thought it was going to be way more difficult than it wound up being with across the board when we explained to our clients, hey, this is what we're doing. For the overwhelmingly, they were like, go get them, fellas.
but
So
I think it's different though. Like if we by us buying the book, we spun out, carved out our own, kind of division. You're now going to be a client served by NewCo Risk. Instead of us starting out not buying the book, I would have to go to Sam, let him know that we started our own business, and I would have had to get, a broker of record signed. And Sam would have had to probably fill out applications, and Sam would have been like, Josh, I love you, man. I've got 100 other things going on right now. It's running well. We'll stay in touch, and I got you at maybe the next renewal. Here, everything of that was handled behind the scenes, and there was just a smooth transfer over.
Did you hire any employees from the old company into your company?
Yep, we did.
So it is more like a carve out.
Yeah, and we had a full transition services agreement. We had a co-brokerage, agreement, which gave us the time that we needed to set up operations, to get, licensed in, almost 50 states, to set up our agency management system, our CRM. We still had to even though we got the contract with the insurers, we still had to kind of fill in mounds of paperwork. So it kind of gave us that ability to set that up.
So fast forward, this was early 2025, so about a year ago that you set up NewCo and you did the transaction and you started going out on your own to service customers. What does NewCo look like today? So take us through the year. How many people have you hired? What have
Yeah,
been the
it's
pain
been
points? Have you grown revenue?
yeah, it's been a whirlwind. I'm loving it. Surprisingly, my wife's like, "You seem calmer than when you worked before," which I don't know. I think it's actually the fact that like we have any decisions we can look back and it's like myself or Andy versus somebody else coming down with a new sales plan or new way to do things. So it does feel much better. Revenue growth, we probably three times. Yeah,
Yeah. I mean,
three times from
compared
what
to
we.
the trailing 12 months. Yeah.
Yeah, so
Wow, that's
three
awesome.
times. We've got 6 employees in the States, another 4 outside the country, looking to hire an additional 2 people. Pain points. I think did we mess up a few times? Absolutely. I think it has to do with agency management system. I wanted the Cadillac Epic. Everybody knows it. When a vendor charges you $10,000 for lessons to how to use it, it should have been a sign. Andy didn't want to go that. I pushed it, and it- God, we'll probably spend $40,000. We're fighting with them right now to get out of it. Yeah. I think Andy, finish what you think in terms of this year.
What
Pain
lessons?
points.
I mean, no, I
Yeah.
mean, growth. Yeah, growth is great, but it's funny. I mean, it's all cliches. There's always something else to do. You go to bed thinking about it. You wake up thinking about it. When I think about what we've done, it's, I don't know, 40 or so like a lot of what we do is vendor relationships. As I think about it, and this is kind of how I think. Like our client service offering is, it's use the iceberg example, right? Client only sees the top 10% of the iceberg, but it's that 90% underneath it that's actually what the company is. And then our job is to put all that together and make it as seamless as possible for the client. But that bottom 90%, like put it this way, we bought the 10%, we bought the clients, but the 90% underneath is the thing we've been building. And it's, it'll never be done. And it was just, not to go back to the AI thing, but it is really interesting because there's technology we're using that if it didn't exist, like, and it didn't 3 years ago, I think we would have had a much more difficult time in year one and year two. So
Yeah. I think what's also been interesting, we've had a lot of people, and a lot of large brokers reach out to us. It kind of goes back into kind of our thesis of why we wanted to, kind of build that are just unhappy and like, oh my God, why would you do that? How did you do it? I'm thinking about doing my own thing now. And I think for us, both of us came, I was at one of the second or third largest broker. Andy was, at Aon. When you're in such a large company, like, oh my God, you know, how is this thing even running? Right. And then we went to a more, call it a regional that was smaller. Like, wait a second, what's going on here? We actually saw how stuff was working. And I don't think if it was for that transition from going from a large to kind of a smaller and to see some of the operations like, okay, I think I know what we can do. I think I can kind of piece this together correctly. And even that, like the amount of technology and things that have been developed for the brokerage community over the past few years, I think has made it a lot easier for people to kind of go out, and build.
I mean, think about it, all the stuff we all use. We use overseas labor, which has been a way to keep your skill level, your delivery model up in terms of quality while reducing expense. We've used softwares. I mean, what else have we done as entrepreneurs to be able to make a better business and run it for less money? Kaustubh, what other ones are you using, would you say? AI?
A little bit, not a ton of AI. I think a big part of it, right, that's different between a big business and a small business is like you can start like you just don't have the same like technical debt, for lack of a better, or like system debt or process debt, right? Like I imagine for you guys coming from the bigger firms, you're like, okay, like there's an army of people required to do this. You go to a smaller firm, you're like, it's a small army that's like barely functional. And it's like, okay, if we were to start this from scratch, like we could put something together.
It's funny you say it because where the technology was a year ago and where it still is, right? There's a lot of things when I think about our tech stack, and I kind of hate saying tech stack, but it's appropriate. There were places where 12 or 14 months ago, we didn't want to invest the time in whatever was the prevailing way of doing things because it was really easy to foresee it's going to change radically in 6 or 12 months. Just did an example. I'll tell you guys because I think this is fascinating. Most insurance brokers collect the premium from their clients and then they have to pay the insurance carriers directly. It's called agency bill. And most insurance brokers have to reconcile client collections every month and then pay, 20, 30, 40 insurance carriers. And then they pay bookkeepers and accountants specific to insurance to do this. And I thought that was preposterous when I heard about it. I was like, that's how it works. That's the most mechanical thing I've ever heard. And lo and behold, there's a couple of companies now that have automated all that, right? So that's the example I give of like, man, and I probably do it 1 or 2 Saturdays a month anyway, where we're going to sit down and like just double check where checks go, but very, very different than, and to the point about the technical debt, we don't have it. We've made some decent decisions. Some, to Josh's point on the agency management system, will probably jettison it, but I don't know. It's kind of funny. I don't know. I don't feel like I'm ever going to be satisfied. And I probably shouldn't
But
say
that's
that
the
where people
exact
know,
thing,
but
right? Like if you were at a big company and they wanted to switch from agency bill to something more automated, they'd have to, one, scope out the software. Two, they'd have to figure out who's going to lead it. Three, they'd have to fire like 30 people, right? Like it's just not going to happen, or it's so hard to make happen. And with small business, you just get to do it.
yes, so much more nimble.
Can I pivot the conversation a little bit? The thing we don't get to do often is talk to entrepreneur pairs, or I guess we did recently, so that's a bad way to describe it. But it's fairly unique, right? Is partners, co-operating partners. Would you guys talk just behind the scenes? How do you manage stuff? Is it front office, back office? Is it I'm the tech guy, I'm the sales guy? How do you think about all that?
This is therapy, man. How do we handle it, Andy? I think that we probably have
I
different
was just
different
cracking on
perspectives.
well, somebody just tweeted about EOS and how, in EOS, you've got the integrator versus the visionary, right? That's your model. And I think my joke was like, well, what if you got two visionaries? Where do but, I think we tend to, I do think we tend to divide a little bit just for efficiency, right? Like you've been more on top of the CRM stuff and there's things we could do. We could probably bifurcate responsibilities more clearly and we'd be more efficient. But I think we Socratically reason through a lot of things and get to, at least speaking for myself, I feel like we have a really good working, like, I don't say this every day to you, but like we have a phenomenally good working relationship and have kept it up for over 5 years, which is like, I don't go home and complain to my wife about Josh. It's, it doesn't, maybe he feels differently, but I'm old enough to be fortunate and just feel fortunate. So,
All right. Well, somebody's got to answer the question. Who does what in the business? How do you divide it? You can't both do everything, or do
I
you?
would
Do you
say
both have your own kind
Andy,
of like
yeah,
book of
no, no,
business?
no. I think we're incredibly fortunate that we have, I think one of the big problems you see sometimes in search, right, and trying to build is the ability to recruit, right, and hire talent. The fact, like, I couldn't imagine doing this on my own. Like, there's just so much going on and complexity with some of these deals that we're working on, and to have somebody of like Andy's caliber that could go to any of the large brokers and run their M&A team nationwide, is awesome. I would say that Andy's more on the operational stuff, whether it's kind of on the agency management system, kind of billing, the structure on the diligence. I'm more on the, I'd say, kind of sales, put together the CRM. Where we both kind of come together is that I'd say, unlike a lot of producers, I want to say this correctly, that go out, hey, I'm the sales guy, right? I had to. I'm very technically proficient. I know my stuff, and that's because nobody wanted to work on smaller transactions in search. Everybody used to make fun of me. So I kind of learned that. And then Andy kind of grew up more in the path of the hard, diligence for some of the largest, PE firms. And so, but I think our paths kind of cross there where we both are very active on the diligence side. So probably like a Venn diagram, operations centers both of us kind of diligence, and then I'm on the kind of sales, CRM side.
I was just going to say that there really is an important, I think, distinction or thing to point out. Josh had been in sales and production roles and business development for 15 years, right? Like, point is, you had a background doing sales and BD, and I didn't. And I think when I talk to searchers, frankly, like that's one of the things I wonder is how are we going to do in business development? And like most successful CEOs, anybody who's successful in business in any capacity has some sales ability, whether they know it or not. And maybe it's not external, maybe it's an internal sort of type of salesperson. But I think for me, to Josh, to your point about like you wouldn't have done this on your own, I thought the same thing. People were trying to say, Andy, why don't you start your own shop? And I'm like, I'm not a sales guy. But it's changed a little bit as you get older, and kind of hopefully your work speaks for itself and you rethink what it means to be a salesperson. But
Actually, I want to add that in my experience, the searchers who aren't comfortable getting involved in sales are like, I'm not saying they're at a competitive disadvantage. I'm concerned for their ability to be successful, because at a certain point, everyone who leads a business is in sales. And that's not to say, right, our generation tends to have this idea of like sales as being a salesy person. That doesn't have to be the case. But I think you do have to be able to like align with the type of sale your small business is in, right? Like you guys being in small brokerage, small agency, insurance sales, you kind of have to be technical. So you don't have to be like super salesy, but you have to be able to work your way through the different types of policies, diligence, executing a new program, all of that. That is the sale.
Yeah, searchers who don't want to go in and be this head salesperson on day one, like they are at a competitive disadvantage.
I
That's the
agree.
nature of small
I mean,
business.
I always kind of, I joke even before is that, being in private equity, your companies get sold, right? But I can outsell a bad year if clients are lost or sold, right? And I feel very comfortable, with that. But I agree. Like I've had people reach out to me all the time. Hey, I want to buy an insurance broker. I'm like, have you ever sold an insurance policy?
you either
No,
have to have some technical knowledge or some really strong people skills, or a combination of the two. But
I do think Sam, you were kind of getting at this, but there's almost this idea that doing sales, it's like a bad word. Like it's like you shouldn't have to do sales. Like if you do good enough work, people will come. It's just not true. It's just not
you,
how business actually seems to work.
I bet you guys know a ton of people in this boat, but I can't tell you how many fractional CFOs I know who, you know, are in their 40s or 50s. And I fit the bill of like my peers who are like, I'm going to be a fractional CFO. And then they realize that they have to figure out how to market and sell their services. And that's where they're like, ooh, I don't know about that part. The one nice thing about insurance, though, I'll say to Sam, to your point about being salesy and that being kind of a dirty word. When I had this epiphany at some point that like everybody buys insurance and they may as well buy it from me because I know that I have integrity and I'm honest and I know what I'm talking about it. You got to buy it from somebody. Like, be that salesperson that I would want to be working with. And that's my approach to it, because I'm lousy at golf and can't hold a conversation. So better know something about insurance.
So why don't we make sure we hit this before we run out of time, which is like maybe a couple war stories of situations where you bailed a searcher out. Maybe they were about to get into a business where their premiums were going to get jacked, or like naked coverages. I don't know what it is. A couple war stories to make it tangible. And then maybe round out with like, how do you start working with people? Do they call you? You get involved pre-LOI, post-LOI? Give everybody a roadmap.
Yeah, this is one of the most profound stories of where insurance diligence killed the deal, and it really helps make sure a very bright guy didn't make a bad decision for lack of information. Because the thing is, you don't know what you don't know, right? And that's why it's so important to have the deal team and all that. So the story is searcher 2 years into it, and that's a whole other conversation, right? You get 2 years into it, you've got this commitment bias, you just want to get a deal done, put up with anything. Finished legal, finished QV, met Josh, I think about 2 months before his planned close date, just at happenstance. I think you were like a get together. And anyway, so we got engaged to do the diligence, look at the company. The searcher knew that there had been a really terrible workplace injury where a guy lost 2 arms, and for workers' compensation
wow.
This
purposes.
is a power line. This is a power line company. These are guys that kind of install power lines.
So the gist of it is the searcher was aware of the claim. It's not, that wasn't new, but what he didn't realize is the impact that would have on the workers' compensation experience rating, which is this index of the company's claims history compared to their peers, and it's weighted for payroll and weighted for what states they operated and that sort of thing. And the significance of that is the business, to Josh's point, it was a vendor to a lot of utility companies and electrical co-ops, and this business's customers as a sort of proxy for safety. They look at that workers' compensation experience rating and they say, well, gosh, if it's over 1.0 or 1.25, we're not going to hire you. And so we did is just, sort of the normal processes, looked at the workers' compensation losses, recast the experience rating so we knew it would be in the future, because there's actually a lag there. A claim might not show up in the experience rating for 2 years, just depending on the timing of the claim. And then unfortunately, it wound up killing the deal, where the whole investment thesis kind of fell apart, where the searcher thought he could grow the business, but if he couldn't get new contracts, and the experience rating, it's a whole other podcast, but it's typically not something you can outmaneuver, or you're not supposed to be able to. Which, if you think about it logically, like say it's a 30 or 40 person business, the only thing that changes is the owner. Why would the experience rating of that group of people, their safety rating, why would it change because you have a different owner? Maybe it changes over 2 or 3 years, but it's certainly not immediately. And
Yeah, so the searcher,
so
the searcher is effectively going to buy a business, but he was not going to be able to renew his existing contracts nor get new blue chip customers in the telecommunication space because of X mod that was going to hit a future X mod due to losses. But I mean, those are the types of.
And so he did not buy the business, right?
Did not buy the business.
The conclusion there was walk away because of a springing problem post close.
That is actually a good one, by the way. Just like a tactical tip for searchers is they can usually, once they figure out the experience mod, it's worth confirming with the policy if they can basically inherit the experience mod onto their new policy, even though it's a new entity in an asset sale.
It's so funny to me. If you ask 10 different insurance brokers about that, you'll probably get 10 different answers.
Yep.
And it's a whole thing. But
no, that was a crucial one for us. It was crucial because, in tree care, workers' comp is a massive cost, right? We pay something like the industry rate in Washington State is around $5 an hour for workers' comp.
That's actually kind of low.
Yeah, I mean, you're monopolistic.
Where it's higher.
You're a monopolistic state, so
that's right. It's a monopolistic. Yeah, correct. But our mod rate is now 0.6, right? And so it's a meaningful difference in cost compared to. And so, like, when I bought the business, we were at like 0.9 or a little bit below 0.9. But even that, it's like if you don't get that mod rating inherited, you have an immediate 10% increase in your workers' comp.
That's beautiful. I mean, I would actually, when I see mods that low, in Diligence, I sometimes question if all claims have been reported, to be honest. Like, that's an awesome mod.
Yeah. Anyways, well, you were going to go somewhere else, Josh?
I mean, here's another, just a simple one. I mean, we had a searcher reach out. This is yesterday, self-funded guy buying a business, a painting business in Long Island, business was doing roughly, call it 2.5 million in sales. However, only about 1.6 was actually being reported, and only a portion then that flowed right down to the workers' comp was actually being reported, as well as with the general liability. And so he reached out, wanted me to kind of, hey, what do these numbers actually look like? And it was going to be a difference when you're dealing, work within New York, a higher X mod. I mean, it was going to be a difference of, almost 100, $20,000. And that's a small business. Gonna, he's gonna have debt on it. That's he's gonna have to figure it out with the seller in terms of how to, reprice that.
You get into all these weird issues that didn't you look at a company that the owner was paying his premium audits with a credit card out of his personal income? There's something crazy like that, and you get. Or we just looked at a manufacturing business that didn't have products liability insurance, which, I would think if you sell a product that you make that you would want to have insurance for that, but apparently not everybody agrees.
I mean, I've experienced this stuff. Maybe 1 out of 5 acquisitions, maybe 1 of 5 like LOIs will have a meaningful insurance problem. And it usually falls into just a couple of these standard buckets. But if you don't know that, ask the questions, you can get totally blindsided. So one is they fail to have a ongoing premium coverage where there should be a premium expense. So their P&L is inflated because they, insert coverage they should have had or should have been having more coverage. Immediately you step into the business, you're going to have that expense. And so you're not just paying like the annual premium, you're paying them a multiple on the overstatement of their earnings. So that's kind of like one. Cover two, like the other one is like, hey, we needed you to have some kind of tail at closing to wall off pre-close risk. And it's only a one-time thing, but it either like if you didn't have some help from you guys, you would have failed to ask for the tail to be bought, or you'd have been covering that tail premium. So therefore you're out of it one time. I've never had a deal like totally like a walk away due to insurance, but I would guess maybe 1 out of 100, you get that. And so with enough reps, it's going to happen.
Yeah. Yeah. We see it, it's middle, private equity doing insurance diligence is the standard, right? They're looking at enough deals and they know that 1 out of, 20, there's going to be an insurance issue. So it's kind of normal course for them to do it. In the kind of call it SMB world, search fund world, you could do a deal and you have no issues, right? Your friend's like, I didn't use insurance diligence, but it definitely does occur. And maybe it's not meaningful enough, like the examples that, that Andy just gave to kill the deal, but maybe it's a retrade. Maybe it's just something that, hey, at least we know what are we getting into, right? So you can budget, so you have the EBITDA protection to kind of budget for it on a go forward basis.
I want to throw one other thing on that too is what's kind of interesting is the brand recognition. So in the insurance broker space, there's, as Josh said earlier, there's been a ton of roll-ups, right? And so what used to be a mom and pop shop now has a sign on the door that says, I'm gonna pick names, I don't know, NNA or Arthur J. Gallagher, whoever it is. And the consistency of the product and the quality of the professional services those firms delivers varies widely. And that's, to me, it's kind of an interesting thing. It's just because, when I was at Aon, for example, we would do diligence on other Aon teams, right? The proverbial Chinese walls. But it was like, hey, we're still going to diligence because we don't trust anybody to do their job 100% right all the time. So you're Sam, you're right. It's not always a deal killer, but like, I don't know, just good enough isn't good enough for most of the people who are going to go buy a business, right? We're not wired that way. So why would you?
Let me put a finer point on that. Most of us are buying a small, kind of fragile business with a personal guarantee where it's kind of tightly financed. There's not, hundreds of thousands of extra dollars of free cash flow to cover insurance whoopsies after close. So it makes a huge difference to get this right. And there's not like an upside to it. There's only a downside to it. Kaustubh, when's the last time you were told your premiums are going down?
Well, actually, I'll tell
Besides
you
your
what.
work comp mod.
Here's no, not because of the mod, because ours still went up because the industry wide rate went up. But no, when we had our truck crash, we got non-renewed on auto, and so then we ended up on a non-standard which was brutal. Like it like tripled our auto for a while, and then I finally found another carrier, and so our premiums came down from a extremely elevated place to only like 50% more than what it was before the crash. So no, the answer is no to your question.
We're fortunately kind of getting back into a soft market property, but mostly for really large portfolios. But there's insurance industry has market cycles, right? A lot of capital chases business, and so the rates will drop. But we're coming off a couple of years of the hard market cycle, which is everybody's premiums have been going up for as long as they can remember. It's as a broker, it's difficult because you don't want to deliver that bad news. And then when we talk about new customer acquisition, it's very rare that we can say, bring your insurance over to us. We can get cheaper insurance, just because that's not where the market is. But we've had some success in the last couple of months recently where we're seeing lower rates on big property schedules.
My renewal is June 1. Don't get me excited.
Right.
We'll see.
All right. So guys, just to put a wraps on it, and then we can add anything at the end. How do people reach you? And when do they typically reach out?
I would reach out. A lot of searchers or even private equity firms ping us. Hey, we're under LOI. We'll have a quick conversation in terms of kind of, understanding just the deal structure, timeline. Andy and I have seen thousands of deals over the years without even doing full diligence. We can kind of give you the hot buttons of the industry, and then I'll say, hey, about 45, call it 45, 60 days from closed, kind of reach out and we can kind of start our insurance diligence work. You can reach me, Josh, at NewCo Risk, or just visit, newcorisk.com, and you can find contact information there. I think the other point is, we don't, unlike a lot of other, I'd say, third-party advisors, our work is complementary. We assume we'll provide full diligence. If the deal goes sideways, hopefully we built a good relationship and we'll be able to work with you, next time. Our goal is that hopefully we can improve upon it from cost, kind of structure. You have a smooth kind of execution, and hopefully we can kind of, become the broker at, upon closing. So for us, the diligence, it's a loss leader, but hopefully we're working with, talented individuals, bringing new life into a company that's going to grow the business. It's very rare that we would lose it, during the operating phase. It's typically not till, they change hand, to a strategic or, investment firm comes in and acquires.
So something else that I would say too, it's so funny because Josh and I both have done deal work for so long. You might buy insurance today. You might already own a business and buy insurance and don't know how to. If you're questioning, is your broker doing a good job? Or a lot of people don't know this. They can switch insurance brokers without switching the policies out, right? At first I was caught off guard. People, you get a call. Hey, can you look at my insurance for me? I didn't know what to do. I said, is there a deal here? Where's the deal? But we can also just look at an insurance program and tell you if we think it's good, bad, competitively priced, their coverage gaps. And honestly, that's to me, a lot of that stuff is a fun part of this too, is building out. Diligence is sexy. People talk about it's deal related, but the day in, day out servicing clients, that's the machine.
Yeah, I mean, if you're a searcher who bought a business but didn't do any insurance due diligence, you just inherited the seller's broker. You either like find out when you actually have a claim and it turns out you're not covered, or you like bite that bullet now and have somebody actually, somebody as in you have NewCo Risk, like take a look at your policy today and look for exposure. All right. Sam,
Any
anything
final
else?
words, boys, before we hang it up?
If you really like your broker and they want to quit their firm, we need to hire people.
We're hiring.
We're growing.
Yeah. No, honestly,
I love that.
We're having fun. But we're working as hard as I ever have. But so happy that we took the leap of faith, and just keep building, right?
NewCo Risk is a specialized insurance brokerage focused on the needs of financial sponsors, including private equity firms, independent sponsors, and search fund buyers, and the companies they acquire.